Welcome to the Willfull Thinking Podcast, where I, Will Coleman, have real conversations with the people shaping our community. Each episode will bring unfiltered talks with local business owners, mentors, community leaders, and friends who inspire, challenge, and make things happen. We hope you enjoy this production of the Willfull Thinking Podcast. This episode of the Willfull Thinking Podcast hosts the mother-daughter duo owners of Hebard Insurance Solutions, a local insurance brokerage here in Loomis, California, where they help homeowners across the state qualify for insurance, whether it be for their home, auto, business, or personal needs. We talk about trends in the insurance industry, the ever-changing insurance industry. We talk about why it's so challenging to maintain coverage or even to qualify for new coverage if you've just recently bought a home. Their insights are brilliant, and they have decades of firsthand experience helping people insure what matters the most: their life, their home, their property, their vehicles, and so on. We are so grateful that they were able to share their time and experience with us today, and we really hope that you enjoy this episode of the Willfull Thinking Podcast. Thanks for listening to this week's episode of Willfull Thinking. Willfull Thinking is brought to you by our friends at Sierra Hills Roofing. If you live in Sacramento, Placer, El Dorado, or any neighboring counties in Northern California, and you need help with your roof, please, I implore you, call Sierra Hills Roofing. So we're joined today by Chris Hebard-Summers and Ashely Summers. And tell us about your business. What do you do?
Okay, we own Hebard Insurance Solutions. I'm the third generation. Ashley's fourth.
Nice.
My grandfather started it in the late 1940s, but officially 1950, right in the location on Taylor Road.
Wow.
Yeah, this used to be old Highway 40.
Okay.
So we had real estate and insurance.
And we're in the old Bank of America building.
Yes.
Were you there before Bank of America, or were they?
Yes. This
Okay.
is new.
It was built in the 80s, I think.
So what was here? Like, what was Taylor Road now?
Well, this was so the house that sits behind the Bank of America.
Okay.
Used to be up close to Taylor Road.
Yeah.
When they sold this part of the property for Bank of America, they picked the house up and moved it back to where it is right now.
Whoa.
Yeah.
Heavy.
What else was here?
That's a lot of guys doing some
That's all
lifting.
that was
I
here.
know. Well, Main Drug was Main Drug.
Well, that was down there. We were at the end of town.
Okay.
Sierra College Boulevard is relatively new.
Okay.
It's been here most of my life. I mean, I don't remember when it wasn't, but my dad does.
Yeah.
And so Highway 80 is also new.
And so you're Loomis born and raised. Was Del Oro around back then?
Oh, yes. So Del Oro
when
for
you
me,
were.
but my dad missed it. So they opened, I think their first graduating class was 58.
Okay.
No, not 58. It was like 62. My dad graduated from Placer High School in 60.
Okay.
So they only had freshman and sophomore the first couple of years.
Yeah. And you're Golden Eagle, right?
Yes.
Yeah. We're doing flag football right now every Sunday at Golden Eagle Stadium. So that's
Which one are you
tag.
guys in?
Like Harvey's 7, so he's in a
Okay.
group of 6 to 7-year-olds, and it's hysterical. Like all the kids are wearing these flag belts, and then one of them hands the ball off to another, and then it's just this flock of kids running after each other. It's tag with a ball essentially, but
They didn't used to have that stuff when we were kids.
So
Yeah.
when I was in I went to Loomis Elementary School,
Okay.
or grammar school, and they did do flag football because we're K through 8.
yeah.
So in 7th and 8th grade we got to do that.
Nice.
Yeah, it was okay. It was
Mine
on the
just
dirt.
not ball sports.
No.
Did you play sports in high school?
No, I was terrible at sports.
Yeah.
I was a gymnast and I did boxing.
Okay.
But the team thing was not my jam.
Nice.
She did do cheerleading for a little while.
1 year.
Yeah, she did like it.
Nice. I played golf, so that's where most of the athletes tend to trend. Is I forget football or basketball. We're gonna be on the links, So
Exactly, you'll end up there someday.
yeah, for sure. So when you're not doing insurance work, what are some hobbies that you have now?
Gosh, I'm loaded with hobbies, but homesteading, I guess, is what you might.
Yeah, I
call it.
want to talk about that.
So we have 10 acres out at the Lincoln Newcastle, right on Fowler Road.
Yep.
We raise pigs and Angus beef, and then I also have a dairy cow, so I do my own dairying.
Nice.
A little Jersey. So I milk every morning, and then I make cheese and butter and all kinds of yummy stuff.
Yeah.
And then we have a garden, and I can.
Can you grow anything this time of year?
You can if you have high
Garlic.
tunnels. Yeah. Well, garlic and potatoes are starting. I'll probably be planting those at the end of this month. And then, yeah, it's really tough because when it gets this cold, the lettuce doesn't really grow unless you have a greenhouse.
So what do you can primarily?
Oh, gosh.
So many tomatoes.
Lots
So
of
sauces
tomato,
and stuff?
lots of salsa, lots
Yeah.
of sauces, lots of jams, jellies, pears. Gosh, I do some chicken stews, some beef
We
stews.
did some mandarins one year.
I do mandarins.
Nice.
Whatever, I get going on.
We have a Meyer lemon tree in our backyard. So for like 3 consecutive Christmases, we would like do homemade limoncello, which was super cool, very popular. But we kind of got sick of it because we were doing it all the time. You think mandarincello would be good?
Yeah.
Have to be, right?
I love it. Yeah, I like
Yeah.
mandarin juice. So I usually freeze the mandarin juice, but then it takes a lot of room.
How many trees do you have?
25.
25. Yeah. That's some serious
That's a lot
day
of
labor.
trees.
Yeah.
Right.
No kidding.
Right. And we're in the process of planting a stone fruit like peaches, plums, pears, apricots. We've
Yeah.
got 100 trees. So.
We did a cheese class together, right? That was
Yes,
pretty
we
fun.
did. That was fun.
Yeah.
I only made it once.
Us too.
Oh,
Yeah. We did not continue on after the class, but that was a good time.
It was.
Yeah, I probably the cheese I make the most is Parmesan,
Yeah.
so that I can because it takes about a year at least to age it. So
And it's expensive.
Yeah. No
it's
kidding.
expensive in the store, so it's good. So I'm coming up almost on a year, so I'll start
Nice.
using it.
Okay.
And sharing it.
And sharing it.
For sure, right? Yeah.
Exactly.
So you're also heavily involved in the Loomis chapter of Seroptimist.
Yes.
Tell us about that.
Seroptimist International. It's an international organization.
Yeah.
It was formed in over 100 years ago in Oakland
Dang.
by a man, but he did it for a woman.
Just get his
It's a
wife out of the house,
women's
right?
organization. I don't think they were related, but I'm not really sure. It was back way a long time ago, 1920 something. And so they formed this whole organization to improve the lives of women and girls.
Awesome.
And so they started back when we couldn't even vote.
Yeah.
Women
That
couldn't
pencils.
vote. Yeah, exactly. And it's expanded into 174 countries
Wow.
in the world.
So what's the local chapter here specialized in?
Loomis Basin. So we all have a pretty we're all pretty good, all of the clubs, at following our mission, which is to improve the lives of women and girls through education.
Yeah.
And so, and that's, if you help a woman or a girl, they help the whole family.
Yeah.
Right. So then the kids are taken care of and they're educated. That means something different to every part of the world.
Yeah.
But here in Loomis, we have teacher grants, and so we support all of the local schools in our area
Great.
with grants that it pays for projects that teachers can't get funding through their PTOs or their, is it PTO or PT? They don't call them PTOs
PTC
anymore.
maybe?
PTC.
Yeah.
Now, they call it.
Yeah, I've been
They've
banned from
changed it.
several of those at this point.
They don't get
Yeah.
that, or they don't get it through the schools,
Okay.
because there's always budget cuts. So we'll get, we did $250 awards this year. So
Yeah, that's great.
pretty big. We also give scholarships away to a girl at Delaware High School
Good.
that is helping out in ways through community service.
And they apply for this, I'm sure, right?
They apply for
Yeah.
that. We also do a Dream It, Be It program where we go into West Confluence,
Okay.
and we help with mentoring and job skills,
Yeah.
interviewing skills, those types of things. It goes on for 9 or 10 weeks over
Right
the
on.
course. We also do Dream It, Be. Did I just say Dream It, Be It?
You
What
did.
was the other one? Live Your Dream. So Live Your Dream, and that's a Seroptimist of the Americas. So it's all over South and North America. And what we do is give a scholarship to a woman that has had a household
Yeah.
who is going back into the workplace or trying to educate herself to get a better job so she can better support her family. And that could be either a vocational school or a certificate program at the local JC, or it could be shoot a BA or a master's program, whatever they're doing to make their lives better for their children.
Awesome.
So we do that. We've been doing that since the start of the club, which we're at 50 years.
I think so.
I had a dream last night that I had to play the violin in front of like my high school assembly. I don't know how to play the violin. So that is a dream that I would not want to live.
Right, exactly.
So
Not exactly.
we would rebrand that for the Will Coleman
Right.
message,
So
but
they
yeah.
have a really great, it's very rewarding. It's very rewarding.
That's awesome.
So I'm not on the committee that picks the winners because I'm better at raising the money. So
Talk about that. We just had a pretty fun event, right?
We did.
So my wife is a member of this organization as well. That's why I wanted to talk about it. But is the purse
The first
fundraiser, is that your largest of the year?
Yes.
Nice.
So it's called In the Bag, and we have it at the Blue Goose every year. We have about 250 women that come.
Yeah.
And they buy raffle tickets to get new and gently used designer purses. We have some dinner. We have a lot of fun. Drink some wine.
Yeah.
It's a lot of fun.
We play some games. We have a lot of fun. I have them out of there by 8:30 so they can get home and in bed by 9 o'clock.
That's great.
It's on a Wednesday night. It's always on a Wednesday night. We raised $20,000.
Holy cow.
How many years have you been doing the event? I think you've been doing it the whole time,
Since
right?
2012.
Is this your brainchild?
Yes.
Yeah.
Yeah.
It's pretty
It's
awesome.
a lot of work. Yeah, no.
Oh, I'm sure it is a lot of work.
Yes.
Yeah.
But it's every year I think I don't want to do it anymore, and then I see how much fun all the women have, and then how much impact we have.
Yeah.
$20,000 is a lot of money to give
Absolutely.
back to the community.
So is that the only Loomis organization that you're a part of, or do you belong to any other?
I'm also in the Loomis Chamber of Commerce.
Uh-huh.
I have
I'm the
been
treasurer this
ever
year.
since I was in my 20s, but my grandfather was a president, as was Ashely.
Yeah.
So were you?
I wasn't president. I was everything but the president. So that's good, but this was a long time ago.
Did Grandpa ever do
kids were
chamber?
little.
My grandpa, her dad?
Yeah, he was always in the chamber.
Oh,
but I
but
don't think
he
he
didn't.
served on the board because he was in the Loomis Lions Club
Okay.
along with my grandpa. So he cooks the clam chowder at the biannual crab feed for the Loomis Lions Club
Awesome.
every year.
And fun fact, this year is Loomis's 40th anniversary. And my grandpa, her dad, was one of the town council members.
Yeah.
The very first town
year.
council.
Have either of you ever given any thought to like local government leadership?
Hard no.
Well, we both live outside the city limits.
Okay.
But I used to live inside the city
Yeah.
limits, and I was on the planning commission back when the kids were 9 or 10.
Yeah.
A while ago.
Yeah. Local government's always been kind of a long-term goal of mine.
Yes. It's where you're going to have the most impact.
That's what I think, right? And if you see something that you don't agree with, the only way to change it is to be involved.
It does
You know.
teach you. It teaches you a lot about how the whole process works, and it was great. It was eye-opening. It's really tough for Main Street business
Yeah.
to do it because you're too easily accessible,
Yeah.
and that was rough. And then decisions affect your business.
Of course.
Yes.
So-
Or
Yeah.
affect your clients.
Yeah.
Right.
Coming
So
to
you
your
have to be
business.
very careful. So that was, but we did our part, and
That's
I'm
great.
always here to support whatever anybody needs.
Yeah.
Because we still own property in the
For sure. We've had the opportunity to work on a few of them.
right.
Yeah.
Exactly.
Yeah.
So that's it.
Well, so the guts of really what I wanted to talk about today is your day-to-day business, and that's insurance.
Okay.
So we're a fairly new outfit organization. We've been in business since 2022. Last year, our best year of roofing to date. We dealt with more than a dozen homeowners that called us and said, hey, our insurance carrier has sent us this letter saying if we don't make these essential upgrades, we're deemed uninsurable and our policy will not renew. We're one of dozens of companies here locally that do our kind of work. I'm sure that the dozen or more customers that we service, we're not the only ones. This is seeming to be a trend that's on the rise. Tell us some information about that. How did it start? Let's go there first, and then what can we anticipate seeing over the next few years?
So about 10, I think it's been about 10 years since the lake fire. That was the first really big wildfire we had here in California.
Okay.
Where it really affected the industry. And so that was the first round of where the insurance companies stood up and took notice and said, okay, we have this new problem. It's new because we've moved into the urban wildfire interface.
Yes, I deal with that quite frequently because there are different codes for roofing than there are for just your standard, city limit kind of properties, and different counties or different, localities, municipalities enforce different codes.
Right.
WUI being much more stringent on the fire hardening than, what you would have in City of Rockland, City of Roseville, et cetera.
Exactly. And it's probably going to get harder,
Yes.
or it's going to get more strict over the next several years because, well, that's a whole nother topic. But anyway, the insurance companies, then we just came back to back, and we could, I'm only naming the fires that are in Northern California.
Yeah.
But as we've seen, Southern California's had more. That used to be where the wildfires happened. We've had the Santa Ana winds
Yeah.
forever. I always heard of fires happening in Southern California. And then, like I said, about 10 years ago, we started to be on fire as well here. And we've had many, devastating fires. Paradise.
In a really short amount of time, too, it seems,
Paradise. We had the Santa Rosa fire.
Yeah.
Was really, because that kind of got into where you would consider an urban area.
Yeah,
And
sure.
it just 4,000 homes, boom, just
Yep.
like that. And as you can imagine, homes to build in California, the prices are increasing just because of our regulations. We have to have a lot of those in place, and it just costs more to do anything in California.
Yeah, insurance,
Right.
overhead, everything else.
So the
Yeah.
insurance didn't keep up with it.
Yeah.
So we have a very strong regulatory environment. I'm sure that's not a secret to anybody in California. And in 1989, 88, 89, we voted for a consumer bill. It's called Proposition 103.
Okay.
That controlled how much insurance companies could charge for auto and homeowners insurance.
Would Brown have been governor back then?
No, it was Garamendi, I think.
Okay.
Or no, Garamendi was the insurance commissioner. Who was I'm not sure who the governor was
Yeah.
at the time. But it was it was on the ballot. So
Okay.
It was voted. We were voted in with it, and it wasn't good for the industry. It wasn't good for people because now a policy, an auto policy. I'll just take for example an auto policy before Prop 103. Insurance companies had a lot more leeway. They wouldn't, they could say, "Oh, you're still a good guy, even though you got 2 tickets
Yeah.
or an accident or something. We're going to forgive all of
Yeah,
that."
yeah, yeah.
You hear that accident forgiveness. Can't do that in California. Can do it in every other state. And so this Proposition 103 came into effect, and it dictated exactly how the insurance company could charge. You have a good driver discount. You charge for this ticket, that ticket, all of those types of things.
Yeah.
And so, and for an accident. And we didn't have that before. So as long as you were a good good driver, your rates were pretty reasonable. But then all bets were off once you were not considered a California good driver, which
Okay.
is more than 1 ticket or an accident with bodily injury. So we moved forward. It also limited.
Well, before we do, I want to
Sure.
ask a follow-up question. So if it did not benefit the carrier and did not benefit the consumer, who did benefit from this law being passed?
So that's what everybody keeps asking. It was brought to us as a consumer watchdog. It was supposed to help the consumer in California. And I suppose it has for a while, and I'll get to that. But back then, it didn't help the consumer because what was built into it, and if you've seen it, you've seen any bill, it's a stack like a foot tall.
Yeah, absolutely.
And the writing is really small.
Yep.
And they put all kinds of stuff in there.
Yep.
And one of the things is that this consumer watchdog group that actually went after, actually got everyone to vote on it.
Mm-hmm.
They actually put in a little clause in there that we have to have a third-party intervener if an insurance company wants to take more than a 9% rate increase.
Yes.
Or I'm sorry, it's an 8%, or 7%. It's a 7%.
6.99.
Yeah, 6.99. They usually.
And that's
say.
annual.
An
An annual rate increase, or
it's just whenever they take a rate increase, they couldn't take more than 7%, or it has to automatically go to a third-party intervener.
okay.
And that can take years.
Oh wow.
And it's at the cost of the insurance company.
Wow.
Well, the third-party intervener is the watchdog group
Okay.
that got the ballot on, got it on the
Got-
ballot.
yeah.
So it's all very, and I don't know why people don't talk about that. I don't know why that's not spread across the news. I
Yeah.
don't know why we don't, because it's been to the tune of billions of dollars the insurance companies have paid to this third-party intervener.
Yeah. Where are they located?
Southern California.
Okay, so they are at least a California entity.
Yes.
Okay.
Yes. And so, that's what we're going to find, I suppose, if we really dug deep into any of these bills and we could talk about that for days.
Sure.
There's always something built in because somebody's going to benefit monetarily.
Of course. Yeah.
It's just the way it works. So fast forward till we get, and the insurance companies all stopped doing business in California right when Prop 103 was voted in because they didn't, oh gosh, what are we going to do now?
And so that was 35 years ago.
Yes, but they turned it. It was relatively quickly. It was 90 days to 6 months that they came back into the marketplace because California represents a pretty good portion, like 20% of a lot of these nationwide companies' revenue.
Yeah.
Because we have a lot of people.
The most populated state in the country.
And
Yes.
we have a lot of money.
Yeah.
And we're geographically pretty large as
Yes.
well. And so the insurance companies were like, oh, it's okay. We don't have to make a lot of money off any one person. And it's relative, remember. But we have enough people here that we're going to still make a profit.
Sure.
And so they did. They did for until we got the wildfires.
Yeah.
The massive, I don't know, life-changing wildfires that we've had over the last 10 years. And the insurance companies aren't able to, they can't continue to pay these. There's no way and be able to stay in business. They're going to go insolvent, which we're seeing today.
Yeah.
We're seeing today because over the last several years, we've had multiple insurance companies stop writing business in the state already.
Yeah.
We've had a handful that have left and don't have any intention of ever coming back.
Yeah.
They're just done with it because.
Well, and I think COVID too was a big time. I mean, that because COVID from 2020 until the middle of 2022 was 2.5 years. The state of California did not let any insurance companies increase their rates. Well, during that time is when we had the largest rate of inflation.
Of course.
Well. So now these insurance carriers are having to pay out claims on premiums that were
not up to par.
And they couldn't increase their rate because it has to be voted on by this.
The intervener, if they had to if they went over the 6.9, but even the 6.9, the small ones, if they did that every 6 months or every year, they could have maybe, I don't know if they could have kept up with inflation, but for 2.5 years they couldn't do anything.
Yeah.
Their hands were completely crossed. So you could understand being a business owner that if you gave a price for $100 to do something and it cost you $10 to do it, okay, you're gonna, or whatever it is, $50, whatever the cost is. But now suddenly it's going to cost you $125.
Sure.
Would you continue doing it?
Yeah, and it's important for like our listeners to know insurers are for-profit businesses.
Absolutely.
Yeah, they are in business to make money.
They have boards of directors. They have investors, just like you and I.
Yes.
In our mutual funds, we probably own stock in some of these insurance companies. And when they don't perform as expected, we're not happy. We sell our stock.
Of course.
The board of directors are on the chopping block. The CEO gets fired. We can just go down the line. Or God forbid, the company goes insolvent.
Yes.
Because they can't afford to pay the claims. The thing we want is the insurance companies to be healthy so they can keep their promise and make the payment to us at our time of need.
And it seems like healthy is not in the top 10 adjectives you would use to describe the state of the insurance business or any particular company insuring policies in the state at the moment.
Absolutely.
Yeah.
They're not. And so now we fast forward to an already broken system, which we've been working on because we've heard about this over the last couple of years. So the insurance companies have either non-renewed in these WUI areas.
Yes.
And even down into here in Loomis.
Yes.
It's tough to get insurance.
we're getting non-renewals even
In Rockland.
Roseville,
Wow.
just because of trees overhanging houses.
Which leaves
or
that
roofing
consumer
problems.
with one option, right?
The California Fair Plan. But, so the California Fair Plan still has some underwriting requirements. One of them being, well, they will insure if you have a bad roof, but they exclude the roof
Yeah.
or any damages that might happen due to the roof failing.
Interesting.
Which, I mean, that's most everything.
Of course. Yeah.
I mean, the
it's your
water's
last
still-
line of defense.
Right,
From, yeah.
exactly. So that's not a good thing. And so then they also won't insure anybody if it has anything that's a life or a problem, like a deck that's scary, that
Mm-hmm.
might cause a fire, or
Debris.
That's a big deal, and everybody's debris can be defined in a lot of different ways.
Yeah, no doubt.
It's all in the eye of the beholder. But you just can't have anything outside your house around your house. You just cannot store stuff that might be considered fuel. And the CAL FIRE, if you go to their website, has an excellent detail. They've got videos. They've got all kinds of really good information based
I
on
agree.
science.
And all the local fire departments are promoting that
Fabulous.
same resource. I don't want to get too deep into the weeds, but I do want to get a little bit into them with what you were just talking about. So, like, let's say that I am a homeowner that only qualifies for insurance through the California Fair Plan, and I do suffer a total loss. How is it that the insurer is going to come in and determine I had taken all the necessary steps to prevent that loss, or I'm just victim to another catastrophe that also would have impacted potentially hundreds or thousands of other homes in the area?
So at the time of loss, they don't really, unless you start the house on fire yourself.
Yeah, sure.
Intentional acts are always excluded.
Yeah.
But at the time of loss, they don't really care why it happened. I mean, they'll figure it out, but they'll pay the loss.
Okay.
So it's paid. At the time of underwriting, when you're trying to get the policy,
That's when this is most important to. Okay.
All of this is most important.
Got it.
And we've had pretty good luck with it. Well, I'll just tell you that the couple of houses that you put new roofs on here in Loomis, we were able to save with the insurance company.
Yeah.
We've been with them a long time, and pretty much they just wanted to see that there was no trees overhanging the roof, so the house wouldn't start on fire as easily.
Yeah.
And they wanted to see a new roof,
Yeah.
a roof that would hold up and be able to take care of the house.
Mm-hmm.
So with that, we were able to keep our insurance in place.
Yeah.
And affordable might be a loose term, but more affordable and better coverage, real coverage,
Yeah.
compared to the California.
Is that a consistent representation of what does happen? If, like, let's say I'm a homeowner that gets this demand letter saying, hey, if you don't do X, Y, and Z, you'll be dropped. If I do X, Y, and Z, is it a pretty high likelihood I'll keep my coverage?
We've had really good luck with it.
Okay.
We've been able to, I would say it's probably a pretty good, like 90%.
I'd say it's, like 90%.
Yeah.
But the ones that are issues are where they've got, a lot more issues than just trees or a roof.
Of course.
And it's pretty easy to tell, look at those ones that.
But there's no guarantees, life never has a guarantee.
No, absolutely.
And so we can't, and people have to decide for themselves. I mean, they need a roof no matter what. But how many trees do they want to take out?
Yeah.
You know what I mean? They move to the country, they move to the wooey areas
Yeah.
because they want to be in the trees.
Yeah.
And so that's a decision every person has to make for themselves. How many trees do they want to cut down? How much can they spend? Because
Yeah.
you could spend a lot of money taking trees out
No
and
doubt.
thinning them. And so at that point, we can't guarantee more than just this year.
Yeah.
Because I don't know what's going to happen next year. Shoot, things change like.
That's interesting too, right? Yeah, you
hard
go
thing.
through all this, you maintain coverage for an additional year, and then you might be up the
But I
creek with
will
no
say,
paddle.
As new insurance companies and new programs emerge, because we're going to start seeing something different
Good.
over the next several years.
We have to, right? We can't keep going
yeah.
down this road.
Nobody wants the California economy to completely fail.
Yeah.
Are we going to have hiccups over the? I'm not really sure. The insurance companies that we've since Southern California, so we're going to learn so much.
This is fresh, right?
Yeah, this is very fresh, and we're going to learn so much from how the California Fair Plan reacts in these areas. We're going to learn about the people that didn't have insurance, and how is our state government going to deal with that, and then
uninsured or underinsured,
and then the underinsured problem, just because people didn't keep their policy limits up with the rate of inflation, because it's gone a little crazy. So we're gonna see. I think if people had, because we've talked to our companies, and they've been, they said we have the money in the bank. We know what we have to do.
Yeah.
We know what we insured. We're writing checks every day.
Yeah.
We're taking care of people, and they're making their own decisions on how they're going to move forward. It's the people that weren't insured or the people that were insured by the California Fair Plan that we haven't gotten a sense of how that's all going to work out, because the Fair Plan was never designed to be the insurer. It was the last resort, but now it's like the only resort
for millions of people. Yeah,
many people, and so I'm not really sure how that's going to all flesh out in the end. We'll hear about it over the night. It's kind of crickets right now, which is weird. We usually hear a lot more, but I'm not really sure what's happening.
Who funds the California Fair Plan?
The insurance companies.
Okay.
The insurance companies that are admitted in the state of California. So in the 60s, they had to come up with something to place a house that was just not insurable. I mean, not truly to any of the insurance companies. So it was in their best interest to put it somewhere else.
Mm-hmm.
But the State Department of Insurance and the insurance companies worked out this association. So it's an association. And so if you want to sell a property policy in the state of California, you have to commit to being part of this association. And it's all by proportionate share.
Mm.
So they all put the money in, and now it's supposed to be able to stand on its own, though it doesn't have enough money to do that.
Yeah.
So what happens if they don't have enough money in a disaster is the insurance companies are assessed on their proportionate share of business in the state. So It's not the state.
Yeah.
You know, that's what people think. You
Yeah.
know, the government's screwing us once again. It's the Cal Fair plan. You know, it's so expensive. But even with the rates they're charging, they don't get enough premium.
That's what I was just about to.
They just don't get enough premium because in the areas where the California Fair Plan has to be written, it's likely that you're going to have a fire.
Yes.
Because the insurance companies aren't insuring you, the for-profit insurance companies.
Yes.
Because they have a lot of data.
Yes.
And they have really smart people working for them that can tell them where it's likely these fires are going to happen and where they're going to be devastating.
Mm-hmm.
And so now we put them into a policy. And, you know, some of these policies, you know, we have people that are paying $20,000 for the California Fair Plan.
Wow.
And with a $20,000 deductible.
Yeah.
And then they have to, of course, buy the companion policy
Yeah.
to pick up the gaps and to get their liability covered. So they're looking at, you know, $30,000 for insurance.
So yeah, $2,500 a month essentially on top of whatever they're paying for their mortgage and
All the
other
other things,
yeah.
like property taxes,
Yeah.
all the other things. But, you know, and if you move into it and you buy the house and you have your eyes open and that's the way it is, then you know what's happening.
Mm-hmm.
But what's sad is when we're already here, right? But we're going to, unfortunately, it's just going to cost more to live in rural areas.
Yeah.
You know, our PG&E is more expensive.
Of course.
We have to pay for our own septic
Yeah.
systems that fail and all the other things we have to do with it. We have to take care of the properties.
Yes.
You know, it costs more, and we know this.
Mm-hmm.
But now it's just going to be another added expense. Our insurance rates are going to be higher when we're in areas where we're more prone to having a wildfire.
Yeah.
And so I think that's going to change the demographic of the area.
It's understandable. I mean, what if you're a new home buyer, right? You're probably you're at the mercy of an interest rate that we haven't seen in 6, 7, 8 years. Still lower than the average would be over the course of probably a 30 or 40 year period, but higher than it was at the start of COVID when we're in the 2s. So you're paying a lot more monthly on insurance. Home values haven't gone down. They've definitely increased since those rates were as low as they were. But now you have to insure it as well. So and not having insurance is not an option, right?
If you have a mortgage,
you have to have insurance. Is there a minimum premium that you have to have? Or
you have to insure it to value. You have
Yeah.
to insure it to replacement because the insurance company is promising to replace the house. They have to make sure they get the right premium by insuring your house with enough limits. And you have to make sure you have the limits. You want your house rebuilt. That's all you care about when a fire happens.
I mean, there's really no wiggle room here whatsoever.
You can have higher deductibles, but you're not seeing as big of savings as you might think.
Yeah.
Just because if a big fire happens, the insurance company, a $20,000 deductible to the insurance company is like, well, we're just paying out $2 million.
Yeah.
So we don't care if you.
And we are seeing a lot of clients that have to back out of home purchases.
I was going to ask. I mean, that just makes sense. And
the first question you asked.
Yeah.
It didn't used to be until the last few years. It was insurance wasn't a big deal, but now.
I think we're seeing probably more homes on the market, and I don't know, that's relative too, because people that a couple of years ago when we started getting into this mess, people went ahead and said, okay, we're going to go ahead and just suck it up and we'll pay it because they're going to fix this, right?
Yeah.
And so I think the only takeaway from all of this is that your rates will never be what they were before.
Yeah.
Every other state, it's hard to imagine, but every other state, it's always been more for insurance than it is here. And it's just because they don't have the same regulatory controls that we have.
Yeah.
Clearly, it's still you look at the premium and you go, well, I'm still paying more than Colorado or somewhere else. Well, it costs a lot less to build a house in Tennessee or Idaho because they don't have the same regulatory environment.
Correct.
The labor costs, even material costs are higher in California. So, of course, insurance, the cost to rebuild is going to be higher. But if you look at the rate per 1,000 of coverage, California has been the bottom 5.
I think like the fourth. I think the
fourth
cheapest
in the whole country. So
wow.
So that's clearly why we're in the problem. And then we have the devastating wildfires. But the biggest problem for the insurance companies is we're not just seeing them. These nationwide companies are not just seeing the wildfires in California. They could probably work with that, but they've got the hurricanes in the Gulf and the hurricanes on the East Coast and the ice storms,
hail, sure.
And I mean the floods. We could just go on and on. And then sprinkle in some fires everywhere.
Yeah.
Because California is not the only state that's burning.
No, of course.
And so we have them all across the country. So when you have that much catastrophe and that much money going out, and they're not making money anywhere, they've got to get really tight on what they're going to want to insure. So back to what you were talking about with roofs and keeping your place up to the way it needs to be, is we just can't be lazy about that anymore, because we're seeing every single day, well, they're inspecting, and we have technology now.
I was going to say, can we talk about that a little bit more?
Yeah, absolutely. So they're doing flyovers with big planes, way high, and they can see, they're taking continuous pictures. They're just constantly flying over the United States.
Yeah.
Taking pictures of every single home, and they come right in, and they can. It's pretty good.
Yeah, so if they do like an aerial inspection, they are pulling images from 4 months ago.
Yeah.
And then from a year ago, and then from a year and a half ago, and then they are looking at, okay, is this just a one-time issue?
Mm-hmm.
Because they have every 6 months they get images over the whole country.
Yeah.
So they can look at these progressions and say, okay, you have debris for at least 6 months. So that's not just you were doing a construction project.
Yeah, that's just consistent.
And there's,
And we can see the leaves in the gutters, and we can see the leaves in the valleys, and they
moss
never
on the
change the
roof.
moss on the roof.
But they don't have agents or adjusters going door to door and actually.
Absolutely.
Yeah.
Well, on a new purchase, on a brand new policy, they are having inspectors within 60 days of that policy go out and physically inspect the exterior of your home.
Okay.
If the value, usually around $1 million, then they'll want to schedule an interior inspection as well. They did not used to do that. So this is probably in the last, 3 to 5 years, they would randomly inspect. But now if you...
Every single
new policy.
Yeah.
Every single time you switch to a different insurance company, you're going to get inspected.
Wow. And
they come around and measure. You've probably seen them. They come around and look at everything. They get up on ladders. They are checking out everything, and then that report goes to the insurance company.
Yeah.
And then the underwriters have to decide whether or not this is something that they can handle. And really, what the big deal is that if we go through this 2 years in a row. If somebody goes ahead and they say, oh, well, we fixed the roof, or we cleaned the gutters, or we took the moss off, and then the following year they get another aerial picture.
Yeah.
And they're going, well, wait, so you're only going to do this because you know we're coming?
Yes.
That's not going to work for us.
Yeah.
Because you're not going to keep the place. And so another thing, we're not doing full interior inspections yet. I think it's coming.
What will they be looking for?
They're going to look under sinks for water damage.
Yeah.
So water leaks, they're going to look to see if you're a hoarder.
Oh, wow.
Because, if you have a lot of fuel inside your house, the chances for fire, it's also a life safety issue.
That's what I was going to say, the chance of survival is.
The last big fire, or maybe it was a couple back, we had an older couple that had been insured with us for, 50 years. My grandfather wrote the policy. And it was an older couple. The wife was in bed. She couldn't get out. And they were probably in their late 80s. And they both perished in the fire.
Oof.
Because he couldn't get her out.
Yeah.
And they started, and the problem was, he put ash into a can, and it was on the carpet next to the fireplace. And it's just a thing that happened,
Yeah.
And then, but they couldn't get in and out through the house and the hallways because they had stuff stacked in there
Jeez.
so high. And this happens with firefighters trying to save people all of the time.
No doubt.
They can't get in, and so that's a problem. That's a true problem. And so I think insurance companies, if they're looking at the outside of your house and they see debris on your side yards or around your property, or you don't have, and I hate to say pride of ownership, but you don't keep the house up, then they just imagine what's going on inside if it looks like this outside.
Yeah.
And so we only want to take a risk on you if you care about your property.
Yes.
So, and a lot of it comes down to, some people don't have, roofs are expensive.
No question.
They're very expensive, though they do last a long time.
Sure.
I mean, if you took, how much is it a day to keep the roof over your head?
Yeah. Probably less than a cup of Starbucks, which is a popular analogy that people like to use. Yeah, that's so true. And it's something that most people don't plan to pay for, right? it's a necessity, but it is not a sexy purchase whatsoever.
You're
You
not
don't get to
saving
show it
up
off
for
to your
20
friend. Yeah,
years.
exactly. And it's just one of those things that catches a lot of folks by surprise. So yeah, financing that is even more difficult now than it was, say, 3 or 4 years ago, because a lot of these loans are unsecured, and now you've got financial institutions taking a risk on someone with, fair to medium credit and for the potential to not be able to pay that loan.
Right?
Yeah,
And they're going to be in second position or third.
Yeah.
Who even knows, what the situation is?
yeah,
But yeah, now, and then you're going to pile on the insurance premiums on top of
Exactly.
it. Because what will happen is, even though, we just talked about it, you get non-renewed. When we try moving you into a different company
yeah,
that maybe has a broader appetite, unless your roof is 20 years or newer,
yeah.
we can't place, if it's a composite or,
A comp,
a
yeah,
comp
asphalt
roof,
shingle,
an
yeah.
asphalt shingle roof, 20 years is about it. I
Yeah.
don't care if we got a guarantee for 50
I
or
know.
30 or
It's
whatever
wild,
it
isn't
is.
it?
It's 20 years.
Yeah.
And then the tile roofs, it just depends, how old they are and if we have to look at
You know what else I've seen too is I've been asked to write more roof certifications than ever, and I don't think they work. I mean, even if I'm willing to put my name on something that I didn't build for, say, yeah, I'll certify this roof for 2 years, meaning I certify that this roof will not fail in the next 2 years, and if it does, it's on me to fix
Oh,
it.
gosh.
Insurers don't care. They
Yeah.
just say, look, great, 2
20
years, but that doesn't make a difference, right? And
No, they have to. They've just gotten to the point. I'm back to they have to draw a line somewhere in the sand.
yeah,
And so they only want a house where somebody's taking care of it.
yeah,
They want to make sure that the house is going to withstand most of the things that are going to happen.
And well, now electrical panels are starting to be a really big problem.
that makes sense, especially as electric cars become more prominent and
So, yeah, the
solar or
older
anything.
panels
Yeah, I mean,
are-
you.
We have a lot of recalled panels they've been recalled over the years.
Yeah,
That were
remember the
installed in
Zinskos?
Zinskos,
Oh yeah,
right, in the 70s, and even the early 80s. And it's not just Zinsko. There's like a whole list.
Federal
Federal Pacific. There's a lot of them, and they start fires. I mean,
Yeah.
it's just the way it is. That's why they've been recalled.
Yep.
And so nobody really paid attention to it over the years. We just kind of, I don't know, it just wasn't a thing. Now it's actually a thing. So just like you would have your bad dog list,
Yep.
you have your bad electrical panel
Yeah.
list, you have your bad roof list, your bad plumbing.
Yep.
So if you have galvanized plumbing, you're not going to be able to get insurance. So that's what the
Wow.
interior inspection is going to do. We don't want to see any galvanized plumbing because they do rot.
Yeah.
I
Yeah.
know because my husband's dealing with that on one of our houses.
Yeah.
Is that it just does. They don't last.
Well, then a lot of people think, oh, well, I'll just answer the application questions and say, no, I don't have any galvanized plumbing.
Yeah. But how would you know, right? Unless you.
Well, right, but then there's a loss, and you just signed an application.
Interesting.
So taking a picture. And a lot of people they put so much stuff under their sinks. I mean, we're all probably guilty of that.
Yeah, sure.
And then we shut the doors, and then there's so much stuff under there that we don't even see the leaks,
Yeah.
right? And then till pretty soon, we have water damage and we have mold and all
Yeah.
the other issues that come along because it comes in our floors and out on the cabinets.
Yeah.
Well, by then, it's not even covered under your insurance
Yeah.
anymore. Anyway, so the insurance company wants us to be cognizant of that and look under your under your sinks. That's the place where you're most likely going to have a failure. Water damage from the interior could come from your dishwasher, your washer, those types of things. But the insurance was totally meant to take care of those sudden and accidental things. That's what it's for.
Yes.
The pipes freezing, all of those things, that's sudden, that's accidental. It's not something you could have done anything about.
Yes.
And that's the kind of thing the insurance policy is meant to cover.
Yes.
It's not meant to cover lack of maintenance.
Yeah.
And so, because you didn't take care of your roof, and so now we have damage, water damage inside.
So the conception that I get from a lot of our customers is, hey, if I have to file a claim for some reason, like let's say you remember last year in February, we had that windstorm where winds got up 90, 100 miles an hour, even in Placer County. Shingles blow off the roof. It's time to file a claim. If they file a claim, are they at a higher risk of losing their coverage?
Absolutely.
Yeah.
So back to, a lot of people with, when you put a new roof on, chances are the wind, you can withstand some pretty good wind.
Up to 130 miles per hour, I think, is the shingle that we use primarily. Yeah.
Exactly. So if you have a good roof on your house, then you're not going to have to worry about that type
Yeah.
of thing. Because the very last thing you want to do is file a claim for anything that's not a complete catastrophe. It's not meant for that anymore.
Yeah.
It's meant for when you have a huge life-altering claim.
Yeah.
So that's why we're going with $10,000 deductible,
Yeah.
$20,000, because you don't want to turn in some small claim because you will be canceled.
Is there any consideration of changing how the deductible is written to maybe instead of a dollar amount, it's a value of the home, 1-2% of the actual home value? I know they do that in other states.
So some non-admitted that don't have to deal with our Department of Insurance regulations do that.
Okay.
So we have seen that. Right now, until the Department of Insurance, it has to go through the whole process of rate making and figuring out where they are. And right now they're in that process. The Department of Insurance finished up his plan, his wildfire plan, his reorganization of our whole insurance system. He's now sent that out. I think it's gone out to the insurance companies.
Yeah.
And now the insurance companies have to decide how they're going to make their rates. What happened was, as soon as it was released, 7 days later or 8 days later, we had one of the largest wildfires in history happen. And so clearly they had to move all of their resources to taking care of this, which we all want to happen.
Of course.
We want them all to be taken care of. And then they have to rethink how they're going to, re-enter the market or open up the market. Many of our insurance companies will only allow our whole company to write one policy a month.
Wow.
So while they're not exiting the state,
they're not writing a lot of new business.
They're not writing a lot of new business.
Yeah.
And that brings us back to State Farm, which I'm sure I know everywhere I go, I hear it. I try to stay out of it, but I hear it. And State Farm they insure a massive part of the state of California's property. And so over the last couple of years, they paused. They won't write any new policies. Then they moved into non-renewing some of the existing policies in the WUI areas.
Yeah.
And then they don't even insure any apartment buildings in the state. So they've non-renewed all of those, which has impacted the market a lot more. And then now they're going to start non-renewals again.
Well, and they're not writing auto insurance policies.
They're not writing any insurance.
Yeah.
So we have a financial ratings, third-party financial rating company that rates all the financial stability of insurance companies. It's called AM Best, and they have an A. Clearly, it's the best.
Yeah.
They've been downgraded to a B, and they're moving down to lower B territory, and a lot of mortgage companies won't accept that financial rating. So we've gotten calls that have said, my mortgage companies won't take my State Farm policy anymore, and they're going to call my loan if I don't get insurance. So we've only seen a couple so far. That's going to be a nightmare for people. They're still, so they just got a 34% rate increase approved by the Department of Insurance.
Okay.
Their rates are very, very low because they haven't had rate increases like they've needed. And they just went to the Department of Insurance within the last couple of weeks and said, you need to give us an emergency 22% rate increase, or we could go insolvent.
Wow.
Which is not good, but I don't want to get everybody freaked out.
No,
or
of
anything,
course.
Because this is State Farm's California subsidiary. They do have other companies that are going to come in. They will make good on any claims.
Yes.
So you won't need to worry that if you have your house burnt down,
Yeah.
it's going to be paid for. It's just that they aren't going to take on any more risk, and the other states' subsidiaries, the parent company, is going to have to make a decision. Do we really want to stay in California?
Well, it makes sense. If it costs them $1.10 to write a policy they're only bringing in $1 for, that was your earlier example. How do you continue to do business with it? You're operating at a loss, right?
Right.
And you have no control over your rates.
Yeah.
The government has all control over the rates.
So we'll see what works, what ends up with that. I think it might be a little bit of, these insurance companies, I don't know, it's like almost a game of chicken. The Department of Insurance is paying what the insurance company is paying. They're we're not going to do this. And our insurance commissioner is elected in our state.
Okay.
So it's political. So he's done being the insurance company after. This is his second term insurance commissioner.
Are those 2-year terms or 4-year
They're
terms?
4-year
Okay.
terms. So he's in the middle, I think, of his second term. But he's already, he didn't,
Nobody wants
wake
to
up
be
one day and say, I want to be the insurance commissioner when I grow
Yeah,
up.
for sure. Not your childhood dream? Yeah.
It's a stepping stone to something else.
Yeah.
And so he's already said he wants
Likely
to
another office of
he wants
government.
to be lieutenant governor.
Yeah, there you go.
And so here, or maybe he wants to be governor
Yeah.
someday. Probably is the hope. You know, he was hoping. So if he needs to keep the consumer on his side.
Yeah.
And so his Superman cape is on, and he wants to save the day. It's just that what's happened is it's not happened that way. We've put ourselves into a horrible situation in California with our insurance market.
It makes me feel really bad for these independent State Farm offices that you see, like City of Auburn, for example, in Old Town and downtown. You know, you've got like an old Victorian style house that has a State Farm sign, like this office is so-and-so insurer. And I've met several of them through Chamber of Commerce or other local events, and they've been in business for 30 plus years.
Yeah.
But they have no control over this book of business that they've spent decades building because their primary insurer is deciding, hey, it doesn't make sense for us to do business this way anymore.
Right. So a lot of them, the beauty of State Farm is they also have State Farm Bank. They do a lot of life insurance. They do. An agent will typically right across the whole spectrum of all the lines of business. So they could flip and do some health insurance,
Yeah.
life insurance. I mean, you have to, right? You have to be flexible.
Yeah.
For us, we only do property and casualty.
Okay.
I mean, we could, if we had to, we could do that. But we just do property and casualty, but we are independent, so we're not limited to one company, and so that makes it a little bit easier for us, I suppose.
But it is hard when we don't have very many companies who are writing insurance right now.
Well, it's so the last thing that us or any of our insurance companies want is for State Farm to leave.
No question. Yeah.
No, we want State Farm to remain healthy.
Yes.
And keep this economy vibrant. We need this. We can't. No one insurance company can take on all the risk in the state of California.
Yeah.
And not even a handful. We need 100 companies because that's how many people we need to insure.
How many do we have? How many companies are actively writing policies in California? Is it a handful? Is it a couple dozen? Is it?
Farmers is still writing a little bit. State Farm Travelers is writing a little bit. We probably maybe have 6 to 10.
Yeah. Liberty Mutual, that's Safeco, right?
Liberty Mutual left.
Oh, they left. Okay.
It is
But it is
Safeco.
but
Yeah.
But they're just going to keep their Safeco arm in California.
Yeah.
So Liberty Mutual is gone. You won't see.
We have Travelers, and thankfully that we haven't had any interruption there.
They're still holding strong. They're very cautious. They're only writing a little bit of business in the state.
Yeah.
But they're still here. And we aren't getting huge non-renewal lists from them. So that's fabulous.
Good.
And they're they're huge.
Oh yeah.
I mean, they're a global company.
Yep.
So they have the resources, and they've looked forward far enough to be able to. They've done a good job. They've done a very good job.
Yeah.
So Mercury's still writing,
Okay.
though in very limited. They wouldn't write in Loomis. You know.
They do our commercial auto.
Yes, they do a good job at that.
Yeah.
They have. I think they're the second or third They're the third largest insurer of the homes down in Southern California.
Wow.
So California Fair Plan was first. State Farm is second, and then Mercury. So, but they're okay. They knew they actually started in Southern California.
Okay.
So, and they're mainly a California company.
Yeah.
Most of their business, more than 80% of their business is in California. They have no intention of leaving.
Yeah.
They know what they're doing, and they've done it pretty well for all these years. And so it's good that we have a good, solid, regional or statewide carrier like them.
Yeah.
Because we've seen several companies leave.
I mentioned golf earlier. It's still a huge passion of mine. And the PGA Tour has several tournaments sponsored by major insurance providers, Farmers being one of them in San Diego. This was their last year in contract, and after 20 plus years, they did not renew. So I wondered if that was a precursor to, hey, if we're pulling out of California in more ways than just sponsoring a golf tournament, or if it just didn't align with what they were trying to do any longer. But
I think they have to look at, we're paying a lot of,
yeah,
it is the bottom line, right? They're looking at the bottom line. I don't think we're going to see an exodus of farmers. I think farmers has been volatile. They're up and down and all over the place, and we never really know what twist and turn they're going to take. But they've been steady for how many years?
Yeah.
I mean, they've been somewhere in the marketplace for how many years? So as long as they keep writing, and they are writing a, admitted, pretty comprehensive package still, if you qualify.
Yeah.
So that they're doing the same thing that all of the carriers are. They're being very careful in our areas, in the WUI areas. And, Palisades, most of the insurance companies had already gotten out of the Palisades.
Yeah.
Just the legacy policies were left in that area. If you had travelers.
Okay.
Travelers stayed with you.
Okay.
And the same thing with Safeco and all of the other
So if you've been with them
companies.
for 20 years,
Yeah.
and kept your house up, they didn't
cancel.
They're
it.
okay.
So
but they stopped writing new
They
business.
stopped
Right.
writing any new business. So it's just a volatile market. So I get the whole bottom line is that you need to take care of your property.
Yeah.
That's really the bottom line. You need to make sure you keep, the debris away, the weeds. You just need to take care of your property and your house. It's your biggest asset.
Of course.
typically. It's your biggest asset. And maybe we learn from this that we need to, have a little side savings account
Yeah.
for the big things that keep coming along, like HVAC.
Yeah.
They don't last forever, and then a roof.
HVAC, I know several guys here locally that own companies and do a ton of work. That is the number one financed home improvement project that exists. They said over 90% of their business, this one specific company who you would know very well, I'm sure, 9 out of 10 of their jobs are finance jobs. So,
It's big.
yeah.
Well, yes, and when it fails,
You don't want to be
have
cold.
do it.
You have to
don't
do
wanna
it.
Be
Yeah,
hot.
you have to do it.
So
Yep.
A roof you can kind of hold off on.
Yeah.
sometimes,
Patch
but-
it up as best you can and pray that you get through another year. But
those
HVAC,
areas
there's-
must show those tarps though.
yeah, no
Don't
kidding.
put a blue
The blue
tarp.
roof. Yeah. You don't want a blue roof. You don't want a blue roof on an aerial image. Yeah.
So that's going to be the takeaway, and maybe, this sounds horrible, but maybe we've always been told, we